So this was the year-end, the annual performance letter and the letter from Bill Ackman himself to investors, Scott. We learned several things in this, primarily, some of the new holdings and some of the things that Bill Ackman and his team are doing to turn things around. And investors seem pleased so far. Can you outline some of these new strategies?
Well, I think you would call it kind of a back to basics approach. So what they've done is try to clear up some of these legacy issues that have been really dragging on the firm. So you'll notice, like last year at the end of the year, they worked towards settling up their Allergan lawsuits. They've exited Valiant, and also earlier this year they've finally admitted defeat in the Herbalife fight against Carl Icahn and have sold down their stake on that. And so now what they're doing is kind of retrenching, and they're going to refocus their efforts on investment. And so hopefully what they're going to do is try to put some of these issues behind them.
Yeah, they've had a pretty rough ride, haven't they? I mean, last year their investment in Chipotle was doing awful. We also saw their passive investment in Nike. Anything new that we've learned about which companies they're investing in?
Well, Nike actually was the newish one, and so what they've done with that circumstance is they've actually sold down their holdings. It was a passive stake, but the value of the company increased by about 30%, 34%, and because of that, they decided to take some profit from it instead of holding it longer.
Yeah, it was fascinating. So it appreciated 34%, and at that point they just totally sold out of the position. And Bill Ackman actually says in the report that it's rare for them to be a short-term investor, but I guess he's getting less wedded to positions, perhaps. Could we put that thought to you, Scott?
Yeah, that's possible. I mean, I guess the other example would be ADP itself. I mean, obviously he ran a proxy contest there last year, but the shares have appreciated considerably. And just a few weeks ago, we saw him take a $125 million profit off of that after the run-up in the company's stock. So I don't know. I guess the idea is that perhaps the potential returns are not as good as what they could put that money towards.